Well, Moody's downgraded U.S. debt that we talked about, and then Eurodollar traders are asking one question. Is this the fuel that a euro needs to break above 113, or is this just another fake out? Let's break it all down. Welcome back, everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in these absolutely insane markets. If you like what you see, smash the like button, hit subscribe, share my videos far and wide. I want to build a huge trading community, and I need your help to do it. So also, please leave some comments for me, all right? Tell me, hey, you stink, or hey, I like it. You know, anything. It's great. YouTube loves comments. But anyway, let's get back into it. All right, I put a video out on how Moody's was the third threat to drop against U.S. debt. And, well, maybe it's going to be a nothing burger because the other two already did it, and Moody's was the last guy to do it, you know. But anyway, if we're looking at the actually I'm looking at the S&P right now. Moody's announced this after the futures market closed. So, and it was also Friday, so there was you couldn't get involved. So I'm expecting this thing to really take a little bit of a dump off of that news. Now, that would be logical, right? That it comes down, and it could come down. On average, the last time this happened, it dropped about 11% on the big drop. Actually, I should say that when Fitch did it, it dropped about 12%. But when the S&P did it way back in, was it 2020, it dropped only about 6% before it recovered. It's because the U.S., Fed had a lot of credibility, and the marketplace recovered because actually the U.S. market's the deepest, and it kind of leads the others. So that the reserve status of the U.S. dollar helped a lot. But as you can see, when the marketplace dumped, the Eurodollar started to recover. Now, as this was going up, the Eurodollar was starting to decline. But now we have the reverse scenario with this thing. So let's go over to the Eurodollar chart. And what we're seeing right now is we had a slight recovery off of the lows of the day from 111, say 30. All right. Market couldn't close above 111.80. I'm gonna say that this is still an important point. Let's go over to the 6-hour chart, and we're gonna get a better understanding when the Asia market opens tonight. Okay, it's 11:30 in the morning on 5/18/2025. So we got some time, Eastern Standard Time. So we got some time before the Asia market opens, and we can actually see how dollar yen reacts off of this. Now, it already did. Dollar yen fell from like 146, like right around the figure, to like 145.50. So that was the first one to, really react. Now, Eurodollar slightly recovered. So the way that I'm looking at this is we need to get through 112.67. All right, first thing we have to get through is 111.77 for the recovery. All right, that's a potential recovery. I could use that as a bounce off point to get to 112.67. If we can't get through 112.67 when we break back down, it's a nothing burger. The marketplace is not really reacting off of it. However, Eurodollar, if it gets above 112.67, it's got the potential to get up to that 113 main support point that we have on a weekly. Now, the euro has a lot of issues itself. Why? Because they're talking, the ECB is talking rate cuts. Just hinted at a possible rate cut this summer. That's dovish. But inflation is still sticky in parts of the Eurozone, so the market's not fully buying it yet. So the bottom line, we got dual narratives happening. And it's going to all depend on technicals. If you're a fundamental trader, you're completely lost in this. You got 6 of this and a half dozen of that. What do you do? So you need to rely on technicals. And we're going to get a better view of things when the Asia market opens. So right now, this should set a slightly bid tone to the euro. But how long can it last? Well, the only way I think that this thing lasts is if we could smash through 114. Now, for those of you that use, moving averages, I want to show you something. I don't use them conventionally. I know that people like to look at them, and I'm going to show you this. All right, here's the 20. Okay, here's the 50. All right. I like to see marketplaces gravitate towards the moving average. Now, if they hold, if they break below the moving average, then we're talking about going down at 100. However, this marketplace is in between the 50 and the 20. If it can break up and sustain above the 20, okay, then the 50 starts rising. Then the bottom starts becoming lower and starts tracking up. However, like I said, I don't use moving average conventionally. Like I would use a moving average when the market was up at this level. I'd look at see where the 50 was and say, we can get a pullback to that 50. So, and if I saw a bearish a signal to go short. So, the weekly roadmap, all right, the weekly roadmap. Right now is we need just to break above 111, say 90, and then we got to get through that 112.65. After that, we should have a better look at what the market wants to do. I think it's going to be really choppy, and the 111.06 on the downside and 111 the figure is a very important level. I've been talking about it in my previous videos. If that breaks, that means that they don't really care about, the Moody's downgrade, and they're just selling the euro. And, you got to pay attention also to the crosses, the sterling yen and the euro yen. So that's all I got for you guys today. I know, I'm sorry. It's like, the Moody's thing has definitely thrown a wrench into the works for us right now, but the marketplace will work through it, and we'll be able to work through it. Come to my daily videos. Make sure that you check out the daily points. I look forward to seeing you in the next video. And remember, always, always enjoy the party, but dance near the door. Cheers.